Hi again, I'm Brenton Hunt from My Car Loan. I've just looked in my local newspaper and I'm really mad. There are car salesmen out there blatantly breaking federal financial advertising and disclosure regulations. What upsets me the most is some of the deals that are actually advertised would cost you more than if the deal wasn't offered at all. In my opinion, this is pure dishonesty. It's a little wonder that ASIC website www.moneysmart.gov.au says, although car dealer finance is convenient, it can be cheaper to get car finance elsewhere. And also, specialist lending and leasing companies all offer car loans, so check out what's on offer before you opt for dealer finance. If you haven't seen our last video, we covered the overview of car finance in Australia. Now in this video, I'm going to talk about why car salesmen just love car finance. I'll show you how and where they are making money from you, and you probably aren't even aware of. I'll also go through two pieces of advertising that mislead you into thinking you're getting a good deal. The fact is, however, that by taking up one of these deals, it will cost you more money than if you didn't take it up. But first, I want you to understand what makes me so angry about the car finance industry. I have no problems with a salesman making a fair living, but I deal with real people and I feel gutted for them when they find out that what they signed for isn't what they thought they were getting. When I go through their car loan, a lot of people don't realise the term and or the total amount of the contract they've signed up for. As I explained in the previous video, we had a client buy a car with a sticker price of $50,000, but the loan contract was for $55,000. To understand this industry better, we need to understand what life is like for a car salesman. They sell us the second most expensive asset we'll ever buy. Purchasing a car is an emotional time, and the car salesman knows it. They also know they only get paid by selling cars. So how much they make per car and how many cars they sell determines exactly what they get in their back pocket. Unfortunately, people fall in love with a car, then work out how to finance it, or do whatever it takes to finance it. Really, what they should be doing is finding how much they qualify for and what is appropriate for their budget, and then find the best car they can get for that amount. A car salesman rarely sells a car if the customer hasn't sat in it first. Therefore, his advertising needs to be geared to getting the client to come and look at the cars in his yard. Whether the deal's a good one or not, it's essential that the advertising is appealing enough to get the client to go and see the car. And this is something that we shouldn't forget. We'll look at some real life examples of the advertising tricks that they use later in this video. So what do you need to look out for when walking into a car yard? Early on in the conversation, a car salesman will want to know if you're going to finance the car or pay cash. One of the early questions they'll usually ask when financing is, how much can you afford per week? Or, how much are you paying a week? If you answer this question, the salesman is going to do all his calculations based on meeting this figure, or very close to it. Even if it means adding a couple of extra years to your loan, that is the only figure he's aiming for. If you answer $100 a week, then don't expect he's going to show you a solution for anything substantially less than that. Even if he does have a much cheaper solution, he's not going to tell you because you've already told him what you're willing to pay. Whatever you do, don't tell the salesman what you can afford. The best way to answer the question is by telling him that you'll give him the opportunity to offer on finance, but you'll go with whoever gives you the best deal, even if it comes down to a couple of dollars per week. More importantly though, negotiate hard on the cash price of the car before anything else. Don't forget that if you're able to reduce the price even by $500, you're saving this plus the interest over the life of the loan. Also remember, $100 a week is not $400 a month, it's actually $433 a month. It's natural to think that $100 a week sounds affordable. That's what the salesman wants you to think. But it's fair to say that people will think harder about committing $433 a month rather than $100 a week. And thinking hard is exactly what the salesman doesn't want you to do. A salesman is conflicted in the trust that comes with dealing with somebody's financial situation and the raw fact that they'll only get paid when they sell something. Sometimes you'll be told that you can drive away today if you take their finance. The salesman may also suggest that using a broker to arrange finance will take days. The fact is that brokers can settle car loans and have the money in the salesman account in less time than it takes a car to get a vehicle inspection certificate. The salesman tactic is to get you to commit while you're hot to trot. Don't fall for this trick. Even if there's a small difference in the weekly rate, remember, $5 a week isn't just a cup of coffee. $5 a week is $1,300 over a 5-year loan. How many tyres or car services would this pay for? I don't understand why it's necessary for people to take their new car immediately. Surely it's more important to save money and get the best deal possible, even if it takes just a little longer. The saying, buy in haste, lament at leisure, is very true when you're more focused on driving the vehicle out of the car yard rather than the details of the loan that you're signing. Extended warranty and gap insurance, again, the ASIC Money website says car dealers usually receive a commission for selling these products and may have an incentive to try and get you to buy them. Extended warranty insurance sounds good, but it's usually very expensive. How does $4,995 sound for a comprehensive 5-year warranty? The conditions you need to comply with in order to have a claim paid are very onerous. Some conditions include a strict vehicle maintenance regime that even includes sending the insurer copies of service invoices within 10 days of getting the car serviced, or risk voiding the warranty. Would a normal person remember to do this? Commissions for salesmen selling extended warranties can be up to a staggering 80% of the premium amount. Gap insurance is the difference, or gap, of the value of the car if it's written off in an accident and the amount still owing on the loan. So that means if the vehicle is written off and it's worth $10,000 and there's $15,000 owing on the loan, then the insurance pays the difference. Sounds like a good idea, right? Wrong. Not many cars ever get in an accident, let alone written off. If the car is written off and it's been fully and properly insured with a normal car insurer, then the difference is only ever going to be something like $500 to $1,000. Gap insurance costs $500 to $1,000 over the term of the loan, so that's an extremely high premium to pay. Again, the salesman can be receiving up to 50% of the premium as a commission. So on a $1,000 policy, he's getting $500 the day you sign up, while you pay it off over the life of the loan. Sound fair? Simply by insuring your new car for an agreed value, you'll negate the need for gap insurance and probably make a huge saving. Now let's look at car advertising. We recently saw an advertisement for a car at $20,835 drive away. The advertisement said that it was $66.69 a week. No other details were made available. This implies that $66 a week will cover the $20,835 loan, which sounds really cheap. We rang the dealer and were told the $66.69 a week offer was only based on the cost price of $19,990 and a 35% or $7,000 deposit. The buyer still needed to fund the $845 of on-road costs on top of the $7,000 deposit. When we inquired about financing the total drive-away cost, we were told it would cost $112 a week to finance with no deposit over 5 years at normal bank interest rates. We ran the numbers. We found that our client would get this loan at $102 a week, saving $10 a week or $2,600 a week over the life of the loan. We also checked the legality of this ad. The ACCC informed us that this advertising was misleading and deceptive. ASIC said the advertisement was unlawful because the offer did not stipulate the extent of the terms and conditions. So be aware that although advertising regulations exist, not all advertisers follow them. But what was the car yard actually trying to do? They wanted their $20,835 car to look like it was only $66.69 a week. They knew the vehicle cost was $112 a week when fully financed. So the aim of the ad was to make the car look cheap and affordable so people would come and look at it. Once at the car yard, the salesman would have an opportunity to get the client in the car and let them fall in love with it. There was little expectation they would be selling it at $66.69 a week, as rarely someone would meet the large upfront deposit required. And here's another example. A large car dealer sent out an offer which came to us by email. The offer featured no repayments for 6 months on a range of typical school run type vehicles. Unlike the previous example, there were some terms and conditions. They included the time frame for the offer, that stock was limited to what was in stock, that government and fleet buyers were excluded, and they reserved the right to change, supersede or extend the offer, and the maximum loan period was over 5 years. These terms and conditions were fine as far as we were concerned. What caught our eyes was interest rates start on the day the loan starts, i.e. at the start of the 6-month repayment-free period, that it was only available to businesses with an ABN, and no interest rate was mentioned. So what this offer meant is that the interest starts the day you get the car keys. Instead of the payments being spread over 5 years, they were reduced to 4.5 years, naturally making the payments higher. On a $20,000 car, not making any repayments for 6 months increases the debt by about $780 or $15 a month just to cover the extra interest. So not only will the repayments be higher because they're over 54 months instead of 60, but the total amount paid will also be higher. It would be financially better to say, I don't want the 6-month payment holiday offer, but the hook in their advertising was to make you think that by having a 6-month payment holiday, you were getting something for free. This deal was restricted to businesses with an ABN. But the funny thing was, these were not typical business type vehicles. So what business would be interested in such an offer? None. By not declaring the interest rate, which they don't have to do because this is a business loan, normal people can't decide whether the offer is good or bad. So what was this dealership really trying to do? They seemed to have an attractive offer for vehicles that a business normally wouldn't buy. The whole idea of the advertising was to get people in the door and get them interested in any of the vehicles they had for sale. Remember, they can't sell the cars if people haven't sat in them first. Therefore, next time you see a car deal that looks good, drill down and read the small print, if there is any, and then analyse what they're really saying. These are everyday examples of the conflict that happens when mixing car finance and car purchasing together in one business. The fact that regulatory bodies suggest consumers shop around for finance probably tells me that they get complaints all the time. Read between the lines. My guess is that they've been swamped with complaints. Once you get into a car finance contract, you cannot back out of it. Cars are not like houses that can be easily refinanced. You usually cannot refinance a car loan into another car loan. You can, however, finance a car loan into a home mortgage. Cars have a high diminishing value. I'll go into the basics of car loan agreements in the next video. There are very few car dealers who do not receive a benefit from having one of their cars financed. This income may make up to 25% or more of their profit on a car for very little work. The Uniform Consumer Credit Code is designed to protect people in obtaining finance for non-business use. Under this code, any kickbacks by the originators are supposed to be declared to the client. Unfortunately, for some reason, car dealers are exempt from this legislation, even though they come into contact with the consumers who need protection. We can tell you that every car salesman that we come across wants to make a personal profit from their client if they're getting finance. The client usually doesn't know the salesman is benefiting from them. When it comes to buying a new car, it pays to analyse the advertising you respond to. Getting more than one finance offer will allow you to choose the best and most competitive deal. I hope you found this video informative. Maybe you'll look at car advertising a little bit differently in the future and drill down a bit on those deals that look really good. In the next video, we're going to take you through the car loan process. I'm going to take you through the steps that are involved so you can see how the process works and what you can do to get a better deal. If you found the information valuable, please place a comment in the section below. We would love to read your feedback of what you found interesting or important in this video. I'll see you in the next video.